Greetings, Ben Murray here with another edition of SaaS Metrics School. So today just kicked off my SaaS Metrics live course. I hold these about 3 times a year. And I want to cover 4 mistakes that SaaS companies make when setting up their accounting foundation. And this is so important. I know we don't think accounting is that glamorous, but it is so important in a SaaS company. And there are 4 mistakes that I see over and over in my client and coaching base. So let's learn from their mistakes. The first is your chart of account structure. That out of the box chart of account structure coming from your accounting system does not cut it. And the chart of accounts is simply a numerical listing of all your general ledger accounts from your balance sheet to your P&L. So when we code expenses, for example, wages, we code that to a specific general ledger account. So with our chart of accounts, we have to have clear and distinct revenue categories in our GL structure. That's one. And then we need good detail for our expense general ledger accounts. For example, wages, taxes, benefits, bonus, commission, contractors. We need that detail. So that proper SaaS chart of accounts. And in my SaaS CFO templates lesson, which I'll throw the link in the show notes, I've got some sample chart of accounts that can help you along. Second, and usually we follow a path here. Second is our P&L structure, which relies on our accounting foundation. So with our SaaS P&L structure, we need the proper format of our SaaS P&L. Again, in the revenue section, clear and distinct categories, subscriptions, variable revenue, services, managed services, hardware, other, for example. And we need our COGS structure, tech support, customer success if they don't sell, DevOps, professional services. Of course, there could be more departments depending on your revenue segments. And then OpEx, which is R&D, sales, marketing, and G&A. Next is department coding. And actually, I should have put that ahead of our P&L structure. We need our chart of accounts. Then we need department coding. We want to avoid that big bucket of expenses where all wages are posted to one GL account. And we don't know if those are R&D wages, sales wages, tech support wages. Sometimes we are even coding contractors in there. It's just a mess. So we need to code every single expense to a department in our monthly close process. And that's just the expectation. It's not harder to close our books that way. So we need department coding, which then sets us up for success with the SaaS P&L structure. And then finally, revenue recognition. I'd say around 3 million and above, if you're scaling nicely, it's time to think about revenue management rather than cash basis, that annual invoice posting to 1 month where you take all credit for that annual invoice in your P&L in 1 month. We now need to spread that over the duration of that subscription. So revenue recognition is so important that we do that generally 3 million and above. And if we're scaling nicely, it's time to think about revenue management and putting that in place. So those are the 4 mistakes I see over and over in SaaS companies when we're looking at the accounting foundation. And just like I said in my course today, if you just implement this lesson that I taught in my course today, you'll be ahead of probably 90% of the SaaS companies out there by fixing your chart of accounts, coding expenses to the department level, setting up the proper SaaS P&L structure, and then eventually putting in revenue management. So 4 mistakes, I'll put in the show notes link to my SaaS CFO template course, which is free. And I have a couple sample chart of accounts in there. Thanks.